If the value of your home dropped 40% overnight, you'd crap your pants.
Shit my pants. Right here?
Hey, what's up, homies? My name is Matt Lurker, and I've got some fantastic news for anyone out there looking to buy a home right now, because it seems like the housing market has just been one wild ride after another. With the median sale price of homes in the US last year reaching the highest we've ever seen at $358,700, it almost seems like we're living in a bubble that has the potential to burst. And we might be seeing the start of that right now. So if you're someone who's trying to buy a home soon, or maybe you just want to understand the market better, you're in the right place. But before we get started, let's all go ahead and do our part to appease the almighty YouTube gods and like this video. Now, with the algorithm gods satisfied, let's get to the good part. So I know what you're here for. You're a rational person who's concerned about the state of the housing market, thinking we might be in a bubble that's about to burst. Or you believe that real estate prices can only go up and our high rate of demand is going to continue to fuel these prices and they'll become the new normal. Whichever one you are, welcome, and let's talk about it. So I don't care who you are. Everyone knows that home values have exploded over the past year, and there's a couple reasons why, which I've actually discussed in a couple other videos. You can check those out if you want to. And one of the big factors that's contributing to housing being so expensive right now is the cost of materials to actually build the house, primarily lumber. You can either hit up a realtor to purchase an existing home that's already on the market, or you can reach out to a builder to construct a new home for yourself. Or I guess you could hope that some distant relative passes away and bequeaths their home to you, but that's a long shot at best. And you'd think that only building a new home requires lumber, but you'd be wrong there. Because even for the homes that are already built, many of them are first remodeled by the seller so they can pull top dollar once they actually list them for sale. And even though it's not a full-on rebuild, the homes that are already standing have also been putting a major strain on the supply of wood available for construction. The massive spike in lumber demand sent prices through the roof this past year, but that has dramatically changed over the past week and a half. Since peaking last month at over $1,600 per thousand board feet, its value has significantly decreased to $904 as of June 17th. This means that lumber is down over 40% since just a month ago, and to put that into perspective, the 2008 stock market crash as part of the Great Recession was only a 30% drop. But that's a total apples to oranges sort of comparison, because the reality is that lumber is still expensive. Because in the grand scheme of things, we need to compare the prices today to the prices we had pre-pandemic. Before March of last year, lumber prices were typically between $300 and $500 per thousand board feet, so it's still wicked expensive if you want to build a new home or do any work on your home compared to pre-pandemic levels. And will the price of lumber drop even further? Well, the jury's still out on that one, but the evidence points to yes. Here's why. First, understand on a basic level the futures market. Lumber is a commodity that, just like gold, trades on the futures market, and the futures market is a place where you can go to buy contracts to purchase commodities like gold, silver, wheat, or lumber, and for those to be delivered to you at a future date. Because the futures market deals only in the future and not in the present, the prices that people bid in the futures market reflect their overall expectation for the value of that commodity in the future. And just like the stock market, the price of a contract is always changing, and you can buy or sell your contract to anyone at any time. And you don't need to understand much more about the futures market right now, but just recognize that if something's being traded on the futures market, then you can kind of get a feel for what the market thinks is going to happen with that commodity over the next few months, based off of changes in its price. And of course, the futures market isn't a crystal ball into what's going to happen in the future, but it is a nice leading indicator to help spot market trends. So if we're going to take our limited knowledge of the futures market and make a wild guess at what the data is signaling, I think it'd be safe to say that the market doesn't think that lumber is going to be worth as much in the next few months as it is right now, and that's reflected in the price that they're paying for it today. Since the price of lumber has dropped in the futures market, then we can tell that people have lower expectations for what its price may be in the near future. So we know that the people buying the lumber contracts don't expect it to maintain its value right now. But check this out. The companies that are selling it are secretly trying to keep its value inflated when they don't even believe that it can maintain this price level. Anytime you've got executives liquidating stock that they own in the company, that's usually a red flag for investors. Like if you're the one running the company, then you for sure know more than I do about what's going on. So if you're trying to cash out right now, then that signals to me that something bad is on the horizon. Over the past month, though, that's exactly what we've seen. In North America, there's basically 5 main sawmill companies, and all of their stock prices have dropped at least 9.5%, which is another indicator of negative expectations going forward. What's more concerning, though, is the massive stock sell-off that's been taking place at Weyerhaeuser Company and PotlatchDeltic, which are 2 of the big 5 lumber producers in North America. At PotlatchDeltic, executives within the company have sold over $12 million worth of company stock in just the first quarter of this year. And at Weyerhaeuser, company executives sold over $14 $14 million worth of their shares in the first quarter. To me, this has to be a sign of what they think of their own stock and of their expectations of the profits that the company can actually bring in. Because you've got to realize that the choice for them to sell off their shares right now is really them choosing to take all this money now and pay the capital gains taxes on it. And they think that's going to be worth more to them instead of continuing to hold these shares as the company brings in more revenue over time. To the executives at these lumber mills, now seems like the perfect time to cash out because their value of their product is at an all-time high that they may not see again for a long time. And they're probably expecting something big to happen that would significantly reduce the value of their immediate payout. They don't even believe that lumber prices have been sustainable. And all while they've been liquidating their shares, they're saying to the public that lumber prices should remain high around $700 to $800 per thousand board feet over the next few years, which is still higher than the pre-pandemic highs. And I'm not saying that lumber won't trade at those prices over the next few years. It totally could, but I also think it's fair to say that the executives of a lumber mill company are maybe incentivized to speak positively to the public about their product, even if their predictions aren't actually the most accurate. Wall Street isn't buying it though. Analysts at the investment banking firm BMO Capital are predicting that even with strong demand in the housing market, their calculations put lumber trading at $447 per thousand board feet a year from now. And unless BMO has short positions against lumber, I don't see any reason why they would lie and spread bad news just to drive the price down even further. And in the long run, I don't think the housing market is going to stabilize back at pre-pandemic levels, but this could be the start of the market correcting to a more sustainable range. I think it makes sense though to assume that lumber over the next 2 years will be trading somewhere between the range of the pessimistic $447 and the optimistic $800 per thousand board feet. And that's a huge range, but unless you have the gift of divination like that hippie-looking teacher from Harry Potter, then we may not get a much narrower scope to work with. Still though, with such a quick drop in price, it's gotta make you wonder, will the housing market crash in response to this? And the answer is no, probably not. While the full effects of the massive drop in lumber prices remains to be seen, it's hard to deny that it seems like the real estate market is at a tipping point where it's about to come back to reality. And even though cheaper materials does make for cheaper homes being built, the demand is still very high and will keep home values from plummeting like lumber. The market peaked around April and May, but we're at the point where a lot of people are priced out. If the market were to correct and property values drop 10% though, that would make it a lot easier for more people to buy a home. Even though the price of lumber has dropped 40% over the past month, that doesn't mean that the housing market is going to crash in response to that. What it does mean is that the supply of new homes will be increasing because building cost will be decreasing. It's not like we're going to see a massive influx of millions of homes hitting the market though, because those homes still have to be built and that's going to take a while. I think it's highly unlikely that we're going to see a crash like 2008 because there are genuinely a lot of qualified buyers out there. Maybe they're just waiting for the right deal or waiting for a price that they're actually willing to pay. And no one knows for sure, but this could be the catalyst that the real estate market needs to bring it back to a more sustainable level where some of those buyers who had been previously priced out are now able to more seriously take a look at buying a home. That's what I'm expecting here because at some point the market has to realize that it's gone too far off course and then has to correct itself. Since the high cost of materials was definitely a driving force in creating the bottleneck of new homes being placed on the market, it makes sense to me that the drop in cost will be able to help speed up the growth of new homes being built. And as the supply of new buildings increases, we should see a change in the value of homes dropping to accommodate the new supply. But let me know in the comments what you think the effect will be from this drop in lumber prices. And if you want to get started with investing, check out the links below. And if you haven't subscribed to the channel already, there's no time like the present. As always, I love you guys, and I'll catch you next time.